Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing how life insurance can help you in estate planning. And if you are ever going to die at some point in the future, having a little bit more money than less money is generally a good thing. And if you don't have a lot of money, then life insurance becomes even more critical. And life insurance is kind of one of those interesting things. The more expensive life insurance is, the more you need it, right? Because typically that would mean your health is bad or your age is high or something like that. But I want to be clear, you know, life insurance doesn't always have to be expensive. It just has to fill a certain need. And as long as it can fill that certain need within a specified budget amount for you, then it's going to make sense. But let's talk about specifically life insurance and how it can help you in estate planning. So I've a number of talking points I want to cover today. The first of which is kind of most obvious. When you pass away, life insurance is going to provide a source of funds that can help in, dissolving your estate, making sure that the estate stays with the family. And the estate can be a house, it can be your assets, vehicles, property, investments, all that's kind of included with your estate. Um, but yeah, a lot of times if there's not money set aside, you know, you might not be able to keep all those assets in the family. And, also, of course, there's a government out there. If you're a higher net worth person, when you pass away and assets start training hands, well, the government, they're going to come in and do a death tax. And, in so many cases, if that tax isn't paid, then people have to sell the actual asset to pay for the taxes on the asset. It's really a terrible deal. It's really a terrible deal. But I mean, life insurance, when somebody passes away, what that can do is just give you immediate access to funds. And that can cover anything. The most obvious is just, the burial and funeral and stuff like that. And, if you've got a 10, 15, $20,000 whole life insurance policy and you're in your 60s or 70s, that's, it's probably going to take most of that. But, if you're younger and you've got maybe a half a million or a million or a 4, 5, 6, $10 million policy, then that's a lot more money involved, right? But, typically when you get higher levels of insurance, there's higher level of assets and, things that you want to protect as far as things in the state, property, investments and things like that. Just understand that life insurance can be customized, or different life insurance products can be used in, one instead of the other for whatever your specific needs are. Because, for some people out there, all they want is when they pass away is they just want the house paid off, maybe a married couple or partnership. And if one of them passes away, they just want to make sure that the mortgage is paid off and that the person has the home free and clear and they never have to worry about the bank taking that away from them again in the future. And when you look at that and you go, well, that's kind of modest. Yeah, but man, that's a generational gift. That is a generational blessing that, out of this tragedy, out of somebody passing away, they loved somebody enough to actually go down and get some insurance and make sure that when they pass away, that the home is paid off and that they'll never have another mortgage payment again. So, what a gift of love that is, right? But, other people, you might have like 3 business partners or 2 business partners. Doesn't really matter. You got business partners and they want to just make sure that if one of them passes away, that the other business owner or owners gets ownership in the company. Because let's say there's 2 business owners and they're both married couples and one of them passes away, heart attack, car accident, could be anything, right? Passes away. Well, technically the business ownership in most cases would then transfer over to the wife of the deceased. Now, maybe you, or I should say wife, husband, partner, whatever it is. I'm just saying the husband died in this case. But, that partner may not be the best person for that business, because if they start getting in there and trying to run the business that they've got no knowledge about, they can destroy the business. And so a lot of times, we're looking at helping people with like key person insurance or things like that, that if somebody passes away, we use the life insurance funds to buy out the other owner, which would be the surviving spouse, and they get money. They just get the money, and the other single or double other owners, they actually get the business, and they don't have to worry about some outside kind of conflict coming in and ruining what had been a great business. So life insurance has so many uses. Higher net worth people even use life insurance to accumulate wealth and to borrow money from, and to kind of be their own bank or something like that. So there's so many ways life insurance can help with estate planning. And really, one of the most important benefits is, who's the beneficiary, right? So when somebody passes away, on all life insurance products, somebody's going to be named a beneficiary, and that person or individual or organization, whatever it is going to get the money and the proceeds. And from there, the people that are left behind can carry on. The money will never replace somebody that passed away, but the money certainly helps, especially if it keeps you in the house and kind of off the streets, or make sure that you've got adequate retirement funds, or make sure that your children are able to go to college, make sure that you don't have to sell the house and, downsize or move into an apartment or something like that. Life insurance is really, really critical for people left behind, but also, just the assets in the estate, because it prevents the need to liquidate assets. And you think about it, well, what if the now single spouse, somebody passed away, what if they have to sell the house? Well, that's liquidating assets, right? They have to liquidate, they have to sell that to get out from underneath it. And the thing is they're still going to need a roof over their head. So they're just swapping from what was once a very stable situation to a very unstable situation. And again, they might have to downsize house, which might not be ideal. Maybe it is ideal. Maybe in that case, if somebody passed away, there's too many memories tied up with the house. It's too big, too much responsibility, too high taxes, whatever it is. Maybe that's the plan. Well, life insurance can cover that interim between, the death and selling the house, so that people can take their time, make any needed repairs, anything like that, and get the most out of the asset. Sell it for the most amount of money, because that's only going to help the surviving person in the future in that relationship. A lot of investments have fine print that, you can't draw it out before a certain age, or there's penalties, financial penalties. But what life insurance really does is just alleviate so many uncertainties, because money doesn't solve every problem, but money solves a lot of problems. And when somebody passes away, there's a lot of problems coming your direction. And just making sure that there's adequate funds there is really important. Another thing having adequate life insurance can do is help bypass, probate. If you've got enough assets, and this depends on what state you live in, every state has different kind of levels for what the probate is. But, if you can avoid probate, you can get an estate settled out very quickly. But once you get into the legal system and probate's kind of enacted due to, you have enough assets that pushes you over certain boundaries that are, stipulated by, the state, then boy, you get into probate, and that can take months and perhaps even years with more complicated estates. So having life insurance really just allows you to create a well-rounded estate plan. It demonstrates that you are thoughtful well in advance of a day that everybody knows is coming, and you ultimately took charge of that and made sure that the people that are going to be left behind are going to be taken care of. And that is just the definition of love, is, and I think life insurance is kind of the definition of love, because you're buying a product, you're investing in a product that you will not benefit from, when you pass away. Now, you might benefit if it's a whole life policy and you can borrow the cash value and stuff like that. But as a rule, term life insurance and stuff, you're going to have to die. You're going to have to die and somebody's going to get that money. Now, with that said, keep in mind there are some insurance policies out there that have accelerated living death benefit riders that if you were to be diagnosed with a terminal illness or a critical illness, you can actually get money out of your life insurance policy while you're still alive. So if you get the right policy, you don't have to wait until you die. God forbid something happen, you could get that money out in advance. There's some policies that have critical illness riders in them. Say you had a $500,000 policy and you had a heart attack. With some of these critical illness riders in these policies, you could potentially get, for example, $50,000 cash just to help offset any medical needs or lost work or anything like that. Now, the policy would only pay out $450,000 at that point. But the thing is you needed that money now to kind of pay those bills and replace that income. So it's cool. It's called the living benefit. It just depends on the insurance company and the insurance policy. But life insurance has so many benefits and can help you in so many ways with your estate planning. My name is Randy Vanderveen, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.